Welcome back to Morning Markets. Today we look at the impact of inflation reads and tariff implications on the global markets. Last week we saw positive returns out of US government bonds as yields across all maturities lowered, reflecting a cooler than expected inflation report. If we look at core inflation in the US, it increased just 0.2% in the month of February. This is consistent with the Federal Reserve achieving their 2% inflation target. Over the year, we saw inflation on a core basis cool to 3.1%, down from 3.3%. This is near the lowest level of inflation we've seen in nearly 4 years in the United States, so positive returns out of the bond market. The stock market was more challenged, and we've seen a number of consecutive weeks of challenging returns out of the US stock markets, with tariffs really weighing on sentiment. If we look at the Michigan Consumer Sentiment Index last week, we saw a reduction of 11%. Essentially, consumers becoming more cautious around the outlook of inflation and what tariffs could mean for their economy. In terms of the Producer Prices Index, we also saw that remain stable month over month, which is encouraging. In terms of Europe, the sentiment was also weaker in Europe given the potential implications of tariffs. So European equities were down. However, Germany did offer a degree of support following the proposed fiscal announcements from their incoming Chancellor to provide a big increase in terms of defence and infrastructure spending. The European Central Bank did also demonstrate their uncertainty around the pathway of interest rates given the backdrop of tariffs at this point in time, so expected to hold interest rates at their next meeting. If we turn to Japan, Japan saw positive returns in terms of the stock markets, largely a result of the weaker yen implications which we saw come through. And China, that also saw positive returns in terms of the stock market as well. One of the key aspects which has been underpinning China has been the proposed announcement of further government spending to support the consumer in China, consumer being key to the Chinese economy and also internationally as well. One of the big events coming up this week will be the meeting of the Federal Reserve, where they're expected to hold interest rates at their current level. Thank you for watching.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.